Oh, so hi everyone. So it's a good day. It's been a good day, a chill day. Um, so today we're gonna discuss why Equity is the biggest bank in East and Central Africa, and we're gonna see how it's been doing moves in the financial sector and what it plans to do in the future. Okay.
Okay, so guys, if you like our content, please subscribe and leave a like and comment below. So I'm gonna introduce and say that recently Equity, not really recently, but Equity has entered into the Congo market,
Mhm.
whereby it's targeting the rural areas, about 1 million people, to
Mhm.
provide financial services for the people who don't have access to financial services in within Congo.
Mhm.
So it did this recently, and it's targeting a high number of people who live in the rural areas. Another
Mhm.
thing is that it's going to open agents, money agents across the out of 26 provinces. It's going to open money agents in 22 provinces in Congo.
Mhm.
Congo seems to be a very big country, so it's going to be a very big move. Okay, it's already made the major move of
Mhm.
opening up to Congo.
Mhm.
And if you think about it, Equity has opened up into Congo the same way it started in Kenya,
Mhm.
by targeting the rural areas where people don't have access to banking services,
Mhm.
and where people are not given things like loans, and they're not given credit scores, and they don't have trust with the bank.
Mhm.
So Equity is a very bold company making major moves, and I think we should pay attention from now henceforth that Equity is one of the biggest countries in biggest banks in East Africa, and as it continues growing, we are going to see many things that it's been doing. And like you said, it also gave Uganda a loan, and that loan was supported by the vice president. And yeah, I think you can continue from there.
Yeah, like you've said, Equity has been doing very big moves, and its biggest customer base has been the lower income person. And I don't know if I think now even bigger players are banking with Equity, but it's how it started as kind of circle, in Muranga, a
Mm.
small shop, and it grew to a big bank. And it was mainly supported to it understood how the market was. It understood majority of the Kenyan people were low income earners. The bigger banks are not giving the low income earners any loans, and other, you know, the money they need to some of these low income earners need a lump sum of money so that they can do a project, and the project can return the money, and mostly their salary is not enough to compensate that. And the bigger banks, are taking them as a high risk people, as a high risk population where they can't even loan them. And even a small loan, you need a collateral, so it was a bit tedious. But Equity understood, it took the risk on this high risk population, and it invested, and it paid off. If Equity even went to overtake these big banks, like Barclays. A while back we saw that Barclays Kenya had collapsed, and it merged with another bank. But in the 1980s, if you said Barclays, it was a very big bank. But now you see Equity is even a bigger bank. It has grown in Kenya. It has even expanded, and this is due to the fact that the African population is a low income population. So, and the word of mouth is a very good business strategy. People say Equity is, bank with Equity. Equity is giving people loan. Everybody will go there, and everybody can see. And we can clearly see Equity rose to during that Moi Kibaki era. When Kibaki came with the policy of anyone can do business. Business is open for all. Big companies started the banking with Equity. It went to want to become of the biggest bank, like the deal, you're saying, where the Ugandan government needed money, and the deputy president, now the president-elect, brokered that deal. He could have brokered the deal with any bank. There's KCB, Also, KCB is another bank we need to watch out for, because also KCB entered Congo immediately after Equity. So I think KCB and Equity are like very good competitors, but I'm here to look at how the model of KCB, because KCB to me doesn't look like it has modeled like a low income bank, but it's still one of bank that tries also to put itself out there. If you look at uh, a bank like Equity, their strategic aim is to be at a trillion Kenya shilling, a bank with assets worth 1 trillion shilling. And I've seen like their strategy is entering a country and buying probably the number 1, 2, or 3 top banks. So, if Credit say it enters Uganda, it buys the number 2 or the number 1, it buys shares there. And from there now, it's easy to assimilate into that country now, because even the customers of that bank are now your customer. Yeah.
Mm-hmm. Yeah, and if you look at Equity, when they started out, they understood the Kenyan culture. They understood that the Kenyan culture is a culture whereby, a culture of saving up little money and then, getting a one-time loan to start a business. And they understood the culture of, things like Chama, Sacco, and they understood that people in Kenya don't save money like the Western or the European or the Asian markets. People in Kenya save money very differently, and they operate in the money sector very differently. They have a culture of building one another to be on the same level. Like if you look at how a Chama operates, a Chama is where we are 5 people, we each deposit a certain amount of money 5 times, and after that, after maybe the 5th person deposits, we give person 1 again 5 times, person 2, person 3. So Equity came up with banking products that resemble that sort of money spending and money saving. And understanding the culture was, I think, part of the Equity's biggest weapon against in the banking market. Because if you look at other banks like Barclays and maybe something like Barclays took up the culture from Europe and Europeans,
Yeah,
how Europeans save money.
actually,
You
sorry
might find.
sorry for cutting you short, but since you say that, even Mita just hit me now, that I think the reason why Barclays didn't survive is because Barclays was there at the colonial time. So when Kenya gained independence, they still had that colonial mentality of the people who have money are a certain class of people. To them, they just thought that Kenya would be a country where the colonial system will continue. That's why if you are like mkulima, or like a farmer, or let's say a boda rider, you couldn't bank with the bank, because it's a bank that entered in Kenya at a time when the classism was high. It's certain people who can bank with Barclays. So even after independence, it didn't shed that, it didn't change, it didn't mutate. But now comes Equity, where Equity came and understood that that system is dying. These guys you're seeing of law here, they're the one who are now taking over. Yeah. So sorry, I just had to say that.
Yeah, and if you look at it, maybe a company like Barclays or these big banks, which came from European or American, culture, they probably didn't think that even someone earning 100 shillings a day who wants to save 50 shillings, wants to keep that money safe somewhere and save up and borrow a loan against that savings and buy a piece of equipment, buy some land somewhere to start a business or something. I think Equity understood that majority of the people in Kenya are not high income earners. They're not people who have formal office jobs. They're not people who, even went to college to be able to, even going to college is a privilege in Kenya. And, not everyone had that privilege of being able to go the formal sector. People are mostly informal. If you look at the soko, whereby people buy and sell, mtumba, people buy and sell things like farm produce, people buy and sell all kinds of things in the soko. Somewhere like Gikombo, you might find those are the biggest clients of Equity. you might find someone like Wangige or N Market. Those are the biggest clients of Equity,
Of
because those
Equity.
people earn, they earn money that they need to save somewhere, you know. And you look at KCB and Barclays, it's maybe it's a process to open up a bank account. To get a loan, it's also a process. So people don't want to save in a bank that wants someone who's a top earner, you know, maybe the 1% of earners. Equity now was able to accommodate people, you know, to be able to sustain their businesses, their small to medium-sized businesses. And Equity also, you know, after Equity, that's when you started seeing SACCOs opening up
There was like
in local areas. Like
a rampage, like an
there's
aggressive
a boom in
expansion of,
SACCOs, of SACCOs. And you see SACCOs would go in like a town, like you see here in Uthiru town, you find there's a SACCO. In Kikuyu, there's a SACCO. Everywhere you go, at the center of that town, there's a SACCO. And that's something that Equity brought out within the community, you know. And more people, their habits of savings improve, because now if I can save 60,000 and get a loan against that 60,000 and pay it back, that gives me an advantage, because I'll keep expanding. You know, for example, if you have a kiosk, you want to open up a supermarket, you've been saving 2,000 a day. You want to open up a supermarket, you need around 100,000, but you don't have the 100,000. You know, Equity probably can give you that loan. You know, and I think that's how it started in the past. Right now, I think we need to review this Equity again and look at how their products work. How do they offer loans? How do they give financial services? You know, and how do they sustain and keep their clients to Equity? Because Equity has very loyal clients because of the fact that you can save any amount of money. Because I remember when Equity started, I remember I went there, it was in Kangware, and you're able to open an account for with 100 shillings, you know. But you find that this KCB banks and these other big banks, you need 1,000 shillings to open up an account. And that's something that people are really discouraged. You know, it's very discouraging for me, someone who earns 100 shillings a day or 200 or 500 shillings a day, to go to the bank and I'm told, you know, the money you have right now to get a credit card and to get all those things, you need 1,000 shillings. And yet I have, you know, maybe 300 shillings I want to start saving. So it will immediately, you lose the customer because that first impression of I have to have 1,000 shillings, yet I have 300 shillings, you immediately lose the customer. But Equity, I think, took out and said, you know, even that 100 shillings, it's sufficient to open up an account. We set you up, you set up with a saving plan, all those things. Equity understood the Kenyan and understood the market of Africa in general. Because, like you said, Africa is a low income generating society. You know, we are not in the first world, we are in the so-called third world. And most of us don't have high-paying jobs or high-paying incomes. Most of us earn money on the lower side rather than on the higher side. And that's where Equity came and saved the day and told people, you don't need so much money to open up a bank account. You just need, you know, a small significant amount, and you can open your account and you can start saving. And recently, also Equity in probably like almost 8 years ago, they opened up Equitel, a telecommunication service whereby it has all the banking services within the SIM card. And I think that really also propelled more people to be able to access Equity as a bank. Because now, aside from M-Pesa, which most people don't know, Equity has its own mobile money services, and I think it's very efficient, and I think it's still growing. Because the last time I checked, Equity has, out of the population of telecommunications customers, Equity has 1% of that population. Although right now we can check.
And you know, I feel like since a lot hasn't changed, because you see that like Equity aim was to target this you know, the medium and small scale income earners. And you see with the rise of fintechs, you know, fintech is making so much money from also that that group, because you can see like
the same market.
Since they entered, they are, you know, everyone is now, you know, most companies now have gone, even in banks have opened sections for like they loan you like fintechs, because now there's a realization that you know, like these guys might have not have much money, but they might be low income earners, but they have like a consistent small income money that you can tap in. And
Yeah.
and also there's like they understand there's also some kind of desperation to the fact they don't have a consistent income. There's some kind of desperation where someone needs this money to do something, and then you can loan them. In fact, they say when you compare the percentage of the loan you pay through these fintechs is way higher than the bank loan through percentage, not through the. So you might find that a fintech, even you're
Very
paying,
higher. Yeah.
yeah, a
Yeah.
loan of
50%.
no, sometimes even
50%
300,
interest.
no, even 300,
Yeah.
300%. It depends on like how you are, you're doing your
Sorry.
business. And going back to equity, you see like now equity, like we were discussing before, how it is going even becoming more just than a bank. It's becoming a very big play even in how governments now associate, because like how even
Yeah.
when they opened Congo, President Uhuru was there to officiate, when they are now building a twin tower, one of the largest buildings, twin tower in Kigali, President Kagame was there. No, it's not being seen like a normal investor. It's being seen, you're bringing a lot of money into the country. And like when you're seeing they go to Congo, they buy the second largest bank there. They pump, first of all, they buy the shares 10 billion, and then they pump another 10 billion. No, that's not small money. That's not money that the government
Yeah.
of Congo can ignore. And also, as a president, if you're being told, this bank has already invested to 20 billion in a country in less than 1 year, you even get on the plane and you go there and you see what, because it's some kind of projection of power. It's seen as a equity is not seen as what's his name, James Mwangi. Equity is seen as Kenya. Equity has now transitioned. It's not a bank. It's not the CU anymore. It's more of it's a Kenyan brand. So anything happens in Equity does, let's say negative or positive in Congo, it will be seen as it will be like Kenyan bank. The headlines will read Kenyan bank. So that's why you see there are a lot of
Kenyan
players,
bank, yeah.
especially in the government, that want to be there and to make sure that everything works fine, so that our interests are taken care of. And like we are discussing, like Equity now is, apart from Kenya, which is the largest market of equity, the second largest market is Congo. Congo has overtaken Rwanda, has overtaken Uganda, has overtaken Tanzania. And I was seeing that also Equity is in Southern Sudan, but Southern Sudan, because of instability, Equity is not that really committed to Southern Sudan. But it shows you that either way, Equity still has plans for each and every sector, because we could see their plan was to be a trillion Kenya shilling bank, to open in Zambia, Malawi, those countries of Southern Africa. But due to COVID and all these uncertainty, it didn't work out. So they decided to concentrate and invest more into the Kenyan market. And not just into the Kenyan market. In this market, they have Uganda, Rwanda, let's say DRC. And if you ask me, I feel like Equity's position is itself, if things go well, Equity might as well be another some kind of black rock around this area. It will be controlling so much money.
And that's what I was thinking about. Equity will now start acquiring assets, not just banking assets, but also country bonds. The bonds issued by governments to start acquiring, land. It will start acquiring companies, maybe in energy, companies
in mining, especially in
farming,
Congo,
companies
also.
in mining, especially in Congo, and it will start acquiring and funding these companies and being a very big asset holder, which will make it even a bigger bank where it can give bigger loans and support bigger companies. Maybe it can start even. Maybe in the future we'll hear Equity getting into Nigeria and having some control over some kind of petroleum and energy business. Maybe Equity will start, rubbing shoulders with companies like cement and construction materials. These are the people who start, gravitating towards you. People who do the everyday factories that produce fast-moving goods. Those kind of companies. Those are the assets I think they might start acquiring. Like you said, it's going to be like BlackRock. Equity might think it's just a bank, but behind the scenes, they may be
It's a
making
very
bigger moves
big
that we've ever
player.
imagined. And
And
equity's reach of Africa, equity's reach of Africa will be very huge.
And I also have a feeling that Equity was very, very involved in the DRC Congo during the East African community. Because, if the fact that DRC Congo was not in the East African community, the countries like Kenya, Rwanda, Tanzania, the East Africa, they enjoy certain tariffs and certain, I can say like certain perks. If you're in the East African community, you find the tax is low, you can trade easily, you can. So Equity felt probably, even if it is in Congo and Congo is not an East African country, the taxes, how the government is dealing with it will be very different. It would be, but if Congo is in East Africa, the same taxes that they are doing in Kenya, Uganda will apply, the same benefit. So I really feel that that even Equity, for Congo joining the East African community, Equity was a big player. And that's what I'm saying, like, Equity is transitioning now in just not to be a bank anymore. It's seen as a very big foreign policy pusher, as a very big influence. And if a bank like that, let's say, can influence a country joining the East African community, that's a bank, that's an asset that that's the moves that we need. Because now it might be look like Equity is the one that's benefiting, but it might be look like Equity is the one that's benefiting, but it's all companies, because if Congo is in there, it means all these companies are making good money, not just Equity. You look at the manufacturing, the import sector, even now you can go to Congo and see if there's any business and also do Congolese can come.
It makes Kenya now a more trusted country. When now people start thinking about Kenya, they think Kenya are these guys who come and invest in your country and come with good business deals. It's the same way we see in Kenya when Americans come and invest, and Europeans, they're more trusted because of the things that their countries, the foreign policies that countries have been pushing towards us in Africa. So when an American comes, even if he's just an American or she's just an American, you might find that her reach and her trust is better, because we've created a culture around saying, if you come from, since Equity comes from Kenya, that means Kenyans know what they're doing at all times. And if you think about it, our education system is in a way that it teaches us, not even the education system, but the environment in itself, the penetration of information technology, the penetration of the internet. It's given people a lot of information. Even if you look at in the Nairobi area, it has a startup culture where people are starting, $1 million companies and expanding to other countries in Africa. For example, you find that if you do your research, you'll find there are quite a number of companies that are opening up in places like Zambia. If you look at even betting companies, they're all across Africa. And some of them, like SportPesa, started in Kenya and expanded across Africa. And I think as much as this past couple of years have been difficult for Kenyans because of COVID and other things that have happened, you find that Equity is like spearheading the race for expansion within Africa from Kenya. And now when we think about investing, now you just don't think about, because of hearing about Equity, now the upcoming generations are going to feel like if you're starting a business in Kenya, you must think about starting it in Rwanda, in Uganda, in maybe South Sudan, Tanzania, all these other countries. It's giving us like a message, go there and see what other people are doing in other countries, not just in Kenya.
But also my hope is that I hope, even if there's these banks let's say Equity and this, they move around. My hope is that they're not only making conditions conducive for the big guys only.
Yeah,
I don't want
yeah.
it to be. It's easy for Equity to do business in Congo, but for me as a normal, I hope they're
Yeah.
enforcing the integration to be an integration for, for everyone, because that's how we also
Mm.
grow the East African community, uh, as
Yeah,
as
yeah,
as one, as one, and
yeah.
Equity going there, it's a good thing, but we also need to see, like, there's also champion and also
Mm.
motivation for small players. Although I've seen Equity, it's doing a lot with the American embassy. There are so many foundations they're working together with in Congo to, like, promote
Yeah,
the rural, capital, and I've
yeah,
seen
yeah.
it's really trying to do something there so that it can, or it can capture, people immediately, and especially the marketing side. Because for me, I'm still like, I find it interesting that it joined the other day, and it's overtaken the subsidiary, the Congo subsidiary has already overtaken the Uganda, because now it's Kenya, the biggest subsidiary, the Congo,
Mm.
the Uganda, the Rwanda, and then the
Yeah,
Tanzania, and then the
yeah.
Southern Sudan.
Yeah, but I think also Equity realized that their framework doesn't just work for Kenyans.
Mm-hmm.
They discovered that other African countries are so similar in the sense that we have a similar kind of population where majority of the population is informal,
Mm-hmm.
and they're not high income earners, and they use the same framework. And to their surprise, it worked. It was
Mm-hmm.
able to generate as much money as they started with when they probably started Equity. And that framework, I think it's the framework that other companies are going to start implementing or copying, whereby we now start targeting the lower end income earners, and
Mm-hmm.
and build technology and services around that kind of population.
Mm-hmm.
Because if you look at even in Kenya, even Safaricom, like you said previously, Safaricom, M-Pesa, it's mostly based on the lower end income earners, all those transactions,
Mm-hmm.
sending and receiving, access even the 1 shilling market. And you find that Safaricom has so many services around the 5, 10, 20 shilling market, where most people operate with ease,
Mm-hmm.
instead of the 1,000 shilling, 10,000 shilling, 20,000 shilling market, where not everyone operates with ease. But you find that even amongst the youth and everyone, people transact small amounts of money, and that's what's making Safaricom and Equity, big players in the financial industry. But Equity mostly is targeting the fact that they target and favor the low income earners. That's what makes them very, very powerful.
Okay,
And
and also, and
that's the
sorry.
framework they can use in any. Yeah, you can continue.
I'm also saying, like, the fact that they target low income earner, it's also so like a formula for all companies, like especially successful company
Mm,
around East Africa, be it for
mm,
food, for anything. The companies that
mm,
target the normal person are the ones you see, they are the billion shilling, they're the one that up there, if it's Bidco, Chandaria, you
mm,
know, they,
mm,
they all have to seem to have an understanding of how the African economy. I don't even think it's more of having the money. I think it's more of understanding the culture of this specific area, especially in East in East and Central Africa. A,
yeah.
a bank like Equity, I'm sure by now,
Mm,
it has guys who go there, and they understand the culture of the country, the politics of the country, and
mm,
because I was
mm,
just saying, like, Southern Sudan has been a very, a very devastating investment for Equity. It closed most of its branches. There's issues with the currency. The fact that Southern Sudan is always in war, it's very, you know, it's a very shaky investment.
mm,
And then I was seeing, also Tanzania. Tanzania is not the fact that is but it's like Equity reception is not as good as you would expect. But you go on the other side
Mm,
of Tanzania, Rwanda, and Congo, you can see that, there it seems there's a kind of some kind of an understanding and a welcome basis where it there's not much resistance. I will say that, especially in terms uh, of business performance. That's how I see it.
mm,
And another thing I wanted
okay.
to add, if we have companies that are making these kind of profits, because like when you see a country like let's say China, how it's developing and doing all those projects, the Chinese government doesn't borrow government's money. It comes to the stakeholders of the country. For example, if we have a
Mm,
project in Kenya, why are we borrowing money outside? And guys like Equity are controlling billions, KCB. Why can't we borrow these guys' money and they fund the projects? You know,
mm,
like they also play a role in growing the economy, like directly, not just,
yeah, yeah.
a bank like Equity. Okay, I'm not saying it's bad to pay things like school fees and those things, but Safaricom, Equity, KCB, these are big players. They need to do more just than just pay school fees for people, do heavy projects.
Mm,
I think it's a
mm,
matter of also political will. I think the guys up there also need to, I don't think the banks can refuse, but I think they need to come to some kind of an understanding. You can't be borrowing money outside and you
mm,
guys are here.
yeah, yeah. But I think that borrowing, like, those are the things that you find that, for example, the guy who was appointed, the guy from the army who was appointed to take over from, the
Mm-hmm.
governor who
Mm-hmm.
was it impeached. So that guy, he pointed out that when people enter into office, they control and they don't allow other people to operate. For example, maybe there are people in the top seats who don't allow companies like Equity or Safaricom to build infrastructure for
Mm-hmm.
people because they probably want the country to stay in a certain state of, of
Mm-hmm.
just to stay the same
Of
so that they can
ambiguity.
operate and manage
Yeah.
in their own way. Yeah, and I think that's why these companies, they do their things the way they're doing them, because
Mm-hmm.
that's how the ecosystem is. It's all about the culture and the ecosystem, because they can't just come and change things the way they want. There are people who are going to say no, and
Mm-hmm.
there are people who are going to restrict them. So you find that Equity is just operating as it's allowed to operate
By
by
certain
the
people.
by the government and the ecosystem, yeah, and the
Yeah.
people in power. Yeah,
In
yeah,
the people in power. Uh, and anyway, I think the time is about to end. You can,
yeah,
yeah. Thanks, guys, and we can continue on the next chapter.
yeah. Continuing in the next chapter. Okay, thank you.